Choosing the right business entity is crucial to your business, and it will determine the tax liability, it will determine operations, it will also determine the type of ownership that you can have in your business. That is why in this video, I am going to contrast and compare the difference between LLCs, S-Corps, and C-corporations so that you can know what decision is going to be best for you. But before we jump in, I need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. The first thing we're going to analyze is liability protection. Which entity, the LLC, the S-Corp, or the C-Corp, gives you the best liability protection? All three of those entities give you liability protection. Now, the C corporation is the entity that supposedly gives you the best liability protection because there is no flow through, meaning nothing from that C corporation comes back to the actual owners of the corporation or the shareholders. When you have an S-Corp or you have an LLC, you're going to get at least a K-1 form that flows from your LLC and your S-Corp back to you as an individual taxpayer, so that when you do file your individual tax returns, people will know that you own an LLC or that you own an S-corporation. Taxation is mission critical. At the end of the day, as business owners, we want to make money, but we want to minimize tax liability. When you are operating as an LLC, you may be a single member LLC with taxes filed in with your individual taxes, or you may be a multi-member LLC that is required to file a separate tax return. Either way, both of those entities require you to pay self-employment tax, 15.3% on top of income tax. And that can be extremely costly, which is why it's so important to evaluate the taxation of those entities. S corporations, on the other hand, can eliminate the actual self-employment tax. But once you go to an S corporation, you have to draw a payroll check out of the corporation, real payroll, just like you did when you work for an employer. You're going to get a W-2 form, you're going to get pay stubs. In addition to that, you can get a distribution out of your S corporation. At the C Corp level, they talk about double taxation because the only way to take money out of your C Corp is by wages, by dividends, or by a loan. And any profits left in the C Corp are going to be taxed at the C Corp level. So from a tax liability perspective, you really got to vet out the entity. There really needs to be some discussion and analysis done as to what the profitability is going to be and what your long-term plans are going to be. Because if you plan to invest back in your business, you probably want to be in a C corporation because you don't want that money being taxed when you're not going to be using that money. Ownership and structure also needs to be looked at when you are forming an entity. When you are going to form an LLC, if it's just going to be you, then a single member LLC is probably going to be doable. If you're going to have other members within your LLC and working with you, then you're going to need to be in a multi-member LLC. And if you're going to be looking at having a lot of members, you probably want to stay as an LLC because the S-Corp limits the amount of members you can have. And once you cross over to an S-Corp, they're no longer members, they are shareholders. And you can only have 100 shareholders, and they all must be U.S. citizens. Therefore, when you are working and vacillating between an LLC and an S-Corp, you got to think about who's going to be in that entity with you, what you want them to do, and how they're going to get paid. Because remember, S-Corp officers need to receive W-2 wages. When you are operating in a C-Corp, that structure is held all within the C-Corp. Everybody that is going to be working is going to be on payroll. And that means you're going to have payroll running weekly, bi-weekly, or monthly. You got to be prepared for that because you have to pay the payroll taxes on time. You have to have the back-end staffing to be able to keep you in compliance. So structure really depends on what it is that you're trying to do. And if you're trying to raise capital and get outside investors, you probably do want to be in a C corporation because that's a requirement for you to raise money and have people invest in your business. cost and complexity is something that we should consider. I know as business owners, we have a tendency to jump and then think later, right? Because when we have an idea, we're just gonna go for it. I definitely understand that thinking. But when you are really thinking about structuring a business for the long term, you really do have to vet out the cost and the complexity. The LLC as a single member is gonna be the least amount of cost for you. Once you get into a multi-member or get into an S corporation or a C Corp, those entities require a standalone tax return, both federal and state. Those entities require you to keep minutes and documentation and register with the state and keep it updated every other year for the LLC and every year for the S Corp and the C Corporation. The complexity at the C Corporation is the highest level because you do have to make certain that you have balanced books and records every single time. And there's a lot more record keeping that goes into managing a C Corporation. But there is a place for all entities. You just need to make sure you're understanding what you're getting into and remember that the cost escalates as you go from a single member LLC to multi-member to S Corp to C Corp. Profit distribution. I love to ask business owners, why are you in business? Many of them say, oh, because I want to get paid. No, that's not the reason why you're in business. You're in business for two reasons. Number one, you do want to get paid, but number two, you want profit. And don't mistake getting paid for profit. If you were working a W-2 job someplace else, you would be getting paid. But to take on the headaches of a business, you got to be getting profit too. So make sure that we have that clear. When you are operating as a single member LLC or as a multi-member LLC, you can take draws out of your business. That is how you will get paid. You do not want to put yourself on payroll when you're operating inside of those entities. Now, when you are operating inside of an S Corp or you're operating inside of a C Corp, you want to make sure you're on payroll. You got to have a W-2 being issued. You got to have pay stubs. You have to determine how often you're going to get paid, weekly, bi-weekly. I always recommend bi-weekly, not weekly. How often you're going to get paid because there's payroll tax returns, there's tax deposits, there's other things that go into having these types of entities. But when you're in the S Corporation, you can get a W-2 and you can take distributions of your profit. When you are in a C Corporation, you're going to take W-2s and you're going to take dividends out of the corporation based on your stocks that you issue. That's part of the record keeping. All of it's great and all of it has a place, but you just want to vet it for your unique situation. I want to give you some different scenarios on when you may choose one entity over another. Let's say that I am working on an app and I know I need to go out and get investors to help me with this app. I'm probably going to need to be in a C Corporation because I want to make sure that when they give me money, I can issue them stock and I can make sure that I am following Regulation D. Look that up because that's out there, that I'm following Regulation D as I'm bringing on these investors. And S-Corp works really well when you are like a professional, your income is going to be above $50,000 and you have gotten your business to the point where it's sustainable. You're going to be able to pull a paycheck every 2 weeks. Now I would go to the S Corporation just because it's time for you to level your business up. And I also want to tell you that when you make the decision to level your business up, your business will automatically level up. Remember that. Don't play a small game when you have big dreams. That is why starting out as an LLC may be okay in the beginning, but eventually you want to level up. You want to be an LLC when you are perhaps dealing with real estate. You have a lot of real estate investments. Being an LLC is perfectly fine because now you have passive income that is not going to be subject to self-employment tax. So those are 3 scenarios that you can kind of think about. If you think of anything else, put it in the comments below, and I'll be happy to answer those questions for you. In the meantime, your business structure is so critical. Understanding what you need to do the first time is important because if not, you're going to be wasting money setting up an entity that you don't need or needing to adjust the entity that you currently have. So make sure you spend some time checking it out. And now that you know better, It is time to do better. I want you to like, comment, and subscribe so you don't miss out on any of this wealth building information.